Hi, it's John Kelly. In this module, we're going to discuss audit strategy. And this is the first of two modules in which we're going to talk about Section 315. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, we need to think of our audit strategy. One is required by Section 300, and documentation of it is required, though that documentation may be implicit. But before we assess risk of material misstatement, before we decide basically how much work we should do, we need to think about what our strategy will be. Are we going to test substantively, or are we going to do tests of control? Now, the first risk we have to assess is what I call risk at the overall level, or overall risk at the financial statement level. And we must document our conclusion about that, and we must have an overall response, and we must document that as well. And the kinds of things that constitute a response to overall risk are emphasizing professional skepticism with staff, having more experienced staff or more supervision in areas that we think are concerning, and being unpredictable in our audit approach, not letting the client know too much about the way we plan to do the audit, and or changing the way we do the audit. We have to assess risk of material misstatement at the assertion level for balances, transactions, and disclosure. And we have to document that, and we have to document our responses and our linkage, and that is in Section 330. Section 315 and Section 330 are closely related. Now, what are the assertions? And here are the assertions as specified in standards. And existence and occurrence. Existence is existence of recorded balances, and occurrence of recorded transactions. And existence and occurrence kind of relate to each other. If a transaction occurs, something is sold, a receivable comes into an existence. And completeness applies to both. Now, it's important to notice that it's existence and occurrence of recorded transactions, because if you didn't think of it that way, you'd get into endless arguments about whether or not it was the existence assertion or the completeness assertion. So if there is an unrecorded receivable, that's not lack of existence because it's unrecorded, and that's therefore the completeness assertion. And then there are two assertions for balances, rights and obligations, and valuation and allocation that only apply to balances. And rights and obligations is, do we own the accounts receivable? Is it ours? And the only constraints that there can be on that, for instance, are, is it security for a loan? Have we factored it? Things like that would constrain our rights and obligations to the asset or the liability. And then valuation and allocation, is the asset or the liability correctly valued? And then there are three assertions that relate only to classes of transactions. Accuracy and cutoff. Is the transaction accurately measured? Is it properly cut off? And is it properly classified? Is it interest on long-term debt, or is it interest on short-term debt? And those are the assertions for balances and classes of transactions. There are also assertions for disclosures. Many people talk about taking a substantive or combined approach, and they deal with them as alternatives. And the way the risk model is now written in standards, that's probably an obsolete way of looking at things. You certainly can't decide to select a substantive approach or a combined approach for the audit as a whole, because when you get down to long-term debt, well, there are no controls probably that affect long-term debt, so you can't test controls, so you will be taking a substantive approach to long-term debt. But even for instance, accounts receivable, the rights and obligations assertion, you're probably going to test substantively the existence assertion or the completeness assertion, and the completeness assertion in particular might be better, easier to test by using control to test it. So you really need to, when you're thinking of an audit strategy, think of it by assertion. For this particular assertion, for this component, What's the best, most efficient, most effective way of doing the audit? And some definitions, just because we're going to use these tests. The standards talk about further audit procedures, and that just means more control or substantive tests at your choice. The other thing that we must do in an audit is we must do substantive tests on every assertion. Can't get by with just control tests. And the other thing that's pointed out is maybe we have to do control testing. And completeness of accounts receivable or completeness of accounts payable might be two examples of two assertions where it might be very difficult to test these substantively without using control at all. And we should also remember, during planning, we are going to be doing a series of risk assessment procedures, and they may constitute analytical procedures and tests of control once we get around to thinking about how we're going to respond to risk of material misstatement. So our risk assessment procedures may already have given us some evidence. Now, if we did analytical procedures at an interim date, we may need to update them to year end. Also, if we did our tests of control, our systems walkthrough at an interim date, we might need to update that to year end as well. Now, there are two ways to pick our audit approach. We could assess risk of material misstatement as inherent risk only, and then design further audit procedures, being both control and substantive test. Or we could assess risk of material misstatement after taking into account our control testing done during planning, and then design further procedures. And probably what we would do there is, having given ourselves credit for the control testing we did during planning, we would just be designing further substantive procedures. If you think about it, there's really no difference in those two approaches. We're doing the same amount of testing and gathering the same amount of evidence. So those are just choices that a firm will make for how they wish to design their audit programs. The other thing, people often talk about the relationship between how good control is and how much we have to test it, and there really is no relationship. The only relationship, I guess, is if our controls are bad, well, we can't test them, so don't do it. I remember I was assigned to an interim audit, and every single control procedure that was tested failed. And the conclusion was, don't worry about it. We plan to do a substantive approach at year end. And I asked, why did we bother doing an interim audit? And we went, oh, we'll stop doing that. There's no point in testing controls if they're no good. We're not going to get any evidence. Now then the question is, well, what happens if controls are really good? How much do I have to test them? And again, the answer is you don't. It's not an obligation, it's an opportunity. If controls are good, but we have a very simple substantive way of testing the assertions, completeness of revenue for an apartment building. Well, we know how many apartments there are, we know how many months there are, we know what the rent is. We can substantively, in a very few moments, calculate and satisfy ourselves with all the revenue assertions. So even though there might be fantastic internal controls, we'll probably decide we don't need to test them. So control testing and substantive testing just should be viewed as two different ways of getting evidence. We need to get sufficient, appropriate audit evidence. We're going to pick the best, the simplest, the easiest combination. And if substantive testing does it, that's what we're going to do. And if control testing, controls are good and we can test them, and that's a quick and easy way of getting evidence, we'll do that. And we'll pick the most efficient and effective mix. Now, what kinds of tests are efficient and effective? And let's first start with analytical testing. And is it required? Well, substantive testing is, and analytical tests are a type of substantive test. And that, by the way, if we do analytical tests on every component, we've now satisfied the requirement to do substantive tests on every component. Are analytical procedures efficient? Often they are. And here's another interesting question. If I do an analytical procedure on revenues, while I may not get a lot of evidence on each assertion, I probably get evidence on every assertion. Not a lot, but on every assertion. So even though I don't get a lot by assertion, I've got a lot of evidence combined. So analytical procedures are going to be my first choice. Doesn't mean I have to do them, but I'm going to think about them as I'm coming up with a strategy first. My systems walkthrough, well, I probably have to do most of a systems walkthrough as a required risk assessment procedure. So why I wouldn't choose to make my systems walkthrough sufficient to allow me to get some evidence from it, I don't know. And so that's probably required. A systems walkthrough is probably required if there are controls to understand the system. Is it efficient? Yes, often. Does it cover all assertions? Often it does. So my systems walkthrough is going to be my second choice, my second place to look for evidence. And between analytical and walkthrough, those are risk assessment procedures that I have to do anyway. And if I can do them in a fashion, sort of do a little bit more than just what would be required for a risk assessment procedure, I also get evidence. Detailed control tests, are they required? No. Are they efficient? No, often not. They often are time-consuming, and they often fail. So I would choose not to do detailed control testing if I can find another way. Do they cover all assertions? They might or might not. We'd have to think very carefully about whether that's true. So I'm going to say they're my fourth choice. Detailed substantive tests, well, if we've done analytical and walkthrough, our probable next choice is a detailed substantive test. And some kind of substantive testing is necessary. If we haven't done analytical, then we will have to do a detailed substantive testing. Are they efficient? Well, no, they're probably as inefficient and as boring to do as detailed control testing, but it may be our only choice. And the other thing about substantive tests is they normally do not cover all assertions. Most substantive tests are directed at a single assertion, a single problem, and that's okay because what we're probably going to be doing is doing more testing on moderate or high risk of material misstatement items. So the fact that the test we pick only deals with that assertion is good. So they're our third choice. Now, nothing is required here. That's just sort of preferences and the way we may think about it and the way we may approach. Now, a strategy. Are we going to pick between control testing and substantive testing? And here's a list of some financial statement components, revenues and receivables, which I'm going to look at together. Is a mix of testing appropriate there? Probably, because there are probably going to be good internal controls in that component. And so we're probably going to pick an approach of walkthrough, analytical, and detailed testing. Accounts payable and expenses. Well, again, probably good controls. So probably a mix of testing. I've got a question mark behind analytical because while it may be possible to do analytical testing on expenses, on accounts payable, it's difficult to come up with an expectation. So analytical tests may not be helpful in accounts payable, though they may help with expense comparisons. Inventory, again, if the client has inventory, they probably have controls, so walk through analytical and detailed testing. Cash. Don't know. Is a mix of testing appropriate? Analytical testing may not be appropriate at all for cash because how do you come up with an expectation of what cash should be this year? It's whatever it is. So analytical procedures are often unhelpful for cash. Now, fixed assets, long-term debt and interest, prepaid expenses, probably no controls surrounding that, so probably no possibility of doing a combined approach, testing both controls and substantively. Fixed assets and depreciation, hopefully we can test depreciation analytically. Hopefully we can test fixed assets by looking at additions over a certain amount. Long-term debt and interest, if we're lucky and if it's simple, we might be able to get by with nothing but analytical procedures. 12 mortgage payments, an interest rate that's fixed. We could probably deal with that entirely analytically because risk of material misstatement is probably low. Prepaid expenses, risk of material misstatement is probably negligible, so hopefully we can do very, very little on prepaid expenses, and we would probably not need to consider controls at all. Evidence needed. Here's the simplest way that I find to look at how much we need to do. If risk of material misstatement is high, we have a big bucket to fill up with evidence. We need to do a lot of audit work. Now, we don't need to spend a lot of time necessarily Maybe a simple efficient test can give us a lot of evidence, but we need a lot of evidence. And moderate less, and low less still, and negligible even less. And I've drawn lines to sort of give an indication that, analytical procedures probably they start to fill up all our buckets. And I've deliberately drawn the analytical line above the negligible bucket because it might well be that if risk of material misstatement is negligible, analytical procedures will give us all we need. And I've drawn the walkthrough line kind of at the top of the low bucket because it could be that analytical and walkthrough are enough, or maybe if they're not, just a little more substantive testing will be needed to satisfy ourselves if risk of material misstatement is low. Now, this is a general picture. You have to use professional judgment and consider each assertion and decide whether you've got enough and consider what strategy works the best. Now, the old audit risk model, which is not in professional standards anymore, was that inherent risk times control risk times detection risk had to come down to 5%. That was an appropriately low level. And we could have rewritten that model as audit risk is equal to inherent risk times the first control test we do times the second control test we do, and so on and so forth, times the first substantive procedure we do times the second substantive procedure we do, and so on, because each test we do multiplies up to come up to audit risk of 5%. Now, if we had decided that inherent risk was low, and that in the CICA extent of audit testing is defined as 40%, and we'd done a systems walkthrough consisting of inquiry, observation, inspection, and reperformance, 4 different procedures, and we conclude that that reduced control risk to moderate, 50%, and we did 2 different and pretty good analytical procedures, and we concluded that those also reduced risk to 50%. Then 0.4 times 0.5 times 0.5 times 0.5 is 0.05, and isn't that magic? Now, I don't want to get too mathematical here, and this has been taken out of professional standards, but this is just an illustration that sort of demonstrates that if inherent risk of material misstatement, is low, a walkthrough and some good analytical procedures might get awfully close in our professional judgment to satisfying ourselves. Now, I don't want to get fascinated by mathematics here, but that's just to illustrate the math of how that might have been come up with. So there are no rules. You need to use professional judgment, and you need to plan for each assertion at each client because they could all be. So thanks for listening.